Can you turn that all down? Do you know how to turn that down? All right. It is 12:02. 12:02 on July 13th. I'm about 2 minutes late to start this week's webinar. I apologize about that. Had a little tech issue over here. Had to call tech support. We got a great tech support team here. And luckily they were able to hop in and bail me out in 10 minutes or so that we could come to you live from New York City for this week's Prop Trader Market Update hosted by yours truly, Derrick Smith. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. At the time of this recording, I believe I'm in 19 positions, 18 longs, still short that AMC short. Even though we're in such a bull market, we're at all-time highs, that AMC short recently has been honestly a lot better than a lot of long positions that I have on. It's been working really well, but we'll talk about that in a minute. Quickly about me, I've been with T3 for over a decade. I've mentored well over 100 professional traders at the company. I'm currently managing a group that I believe is in excess of 100 traders at this point. My spare time, I'm a big martial artist. I have had to take a little hiatus from the martial arts world because of COVID. Last year and a half, I haven't done too much there, but I'm planning on getting back at that soon now that I am vaccinated in New York. Also a really big skier, really big into traveling. I think everybody knows that if you've been following along with the webinar on a week-to-week basis. And of course, my ultimate passion is the stock market. So today I'm going to be talking about markets. We'll be talking about this week's update related to everything stocks. If you have any questions on anything, if you have any questions on trading or my approach or T3 or how you can get involved in T3, whether it's T3 Live or T3 Trading Group, absolutely reach out to me. Here is my email address. So with that said, let's go to the stock charts. All right, so where are we? As I speak, the S&P is at all-time highs. Even today, we had a little gap down this morning, a brief pre-market scare that lasted for about 30 minutes because the CPI number this morning, the inflation number, came in a little bit higher than expected. So what did that do pre-market? Let's take a look at the pre-market price action here. So, if you're a T3 trader, whether you are a retail trader or a professional trader, you have access to the markets starting at 4 a.m. That doesn't necessarily mean you want to trade at 4 a.m. Markets can be very thin, but you can see here 4 a.m. the SPY is not doing too much, little bit of a drip down, and then our CPI number comes out at 8:30, and it just sank the market real hard, real fast. So here's your 8:30 CPI number coming out, followed by a quick little bounce, shooting star into the moving average, breaking down further, so it's a lower high, and then we actually had a V-bottom pre-market king-queen reversal pattern on the 5-minute chart, and then we worked our way back up while I was doing my morning meeting for my team at 9 a.m. Then at 9:30, market opens, and guess what? Guess what? We continue our way back to all-time highs. Who would have guessed? Now, the real thing to be paying attention to right now is the TLT. So the TLT is the first thing I look at just to get a quick snapshot of the interest rates. And so 2021, the year 2021, I've been speaking to a lot of people about this. I've been talking about it almost every week in my webinar. A lot of people are reaching out to me saying, hey, Derrick, I've really been struggling in 2021 compared to 2020. Why is this market environment so hard? And I got a reality check for you. 2021 has not been a hard year. Maybe a little difficult compared to 2020, but if anything, 2020 was an anomaly. It was an extremely easy year. The price action was phenomenal. Huge down move in COVID. We shut everything down. We stimulate the heck out of the economy. Everyone's at home trading, and then the market just goes up and up and up. and that culminates at the end of last year into the beginning of this year with these little bubbles that were popping up all over the place and a lot of these speculative type of stocks. It was just one after the next. It was the 3D printing names. It was the marijuana names. It was Palantir. It was Jumai. It was all those speculative stocks going nuts. And then of course we had Wall Street bets come in. We had the GameStop move. We had the AMC move. Then those came all the way back, and then they went a second time. That's really the 2020 environment. That's a pretty, even though it went into the beginning of 2021, that's a pretty unusual trading environment. Markets usually don't trade like that. And of course, it was great. It breeded a ton of opportunity. But 2021 has not been a difficult year. You just had to make the appropriate adjustments. It's not the same as 2020. It's definitely different. But you have, one thing about market environments, I can tell you, I've been trading professionally for over a decade. Market environments are constantly changing. And the hallmark of a truly successful trader is someone who can constantly change their approach based on the new market environment as it hits year after year. And 2021 has been a different environment. The key to 2021 has been an understanding of relative strength and relative weakness. And where a lot of the relative strength and relative weakness has come from at different points in this year has been the interest rate trade. So if we scroll back to earlier this year, you can see this TLT falling hard. What does that mean? It means interest rates are going up, right? I think the 10-year got up to like 1.75% or a little bit more. And then at a certain point on the way down, this was negatively impacting markets. I'm sure people can remember this correction that the NASDAQ gave in March. The NASDAQ pulled back, I think it was about 10% or so, which is a technical correction, from 338.20 down to a low of 297.45. It was a serious technical correction. Why did that happen? Well, let's look at the TLT in March. That's when the TLT actually bottomed out. Interest rates were at their highest. So interest rates being higher is bad for tech, right? Tech relies heavily, especially a lot of those speculative names that don't even make money, rely heavily on the fact that money has been more or less free. Well, as TLT goes down, interest rates go up, that means money's not free in the same way. So that is bad for tech, it's good for energy, it's good for financials, it's good for what we were referring to as the reflation trade or the reopening trade post-COVID, where we were able to tell, we were getting out of the way on those speculative names that broke down really hard. Some of these names came down even as the market continued to have a bull market. Some of these stocks came down like 75%. You're just typing up Jumai real quick. Jumai went from $70 down to $17, and that was very typical of a lot of these names. We had a whole list of them. Fubo here went from 57.50 in January down to $15 in May. And by the way, we caught that bottom in these stocks pretty much perfectly in mid-May, recognizing the oversold amount in those stocks. But anyway, I digress. So it's been all about the TLT. So TLT selling off really hard here created the weakness in the NASDAQ. And what was happening at the same time? Where was your relative strength? Look at what the energy did. Look at the move here in February into mid-March. Look at XLE peak in mid-March as Q's bottom, basically at the exact same time. This is relative strength and relative weakness. If you are recognizing these things and you are rotating yourself into energy stocks at the right time and out of tech stocks, well, guess what? That was a pretty easy trade. And how do you know it? Because you're paying attention to TLT and you understand how interest rates affect the market environment, how interest rates create relative strength and relative weakness. And now what's happened recently? Well, look at this move higher in TLT. What does that mean? That means lower interest rates again. Who's that good for? Well, it's good for tech. So now let's take a look at what the NASDAQ has done versus maybe the XLE energy ETF over the course of the last month and a half, since we can look at it since early June or so, or mid-May. Well, here you go. Here's your Qs, mid-May, early June, whatever starting point you want to utilize, just higher and higher and higher. The NASDAQ took over relative strength. Look at the move in Apple. insane. Apple's gone parabolic. I'm sure everyone remembers at the end of April, they reported this phenomenal earnings report and they smashed the stock all the way down. Well, since the beginning of June, just ripping higher along with the Qs. Amazon, look at this move since the beginning of June in Amazon. Phenomenal. Google, same thing. Maybe not quite as strong as Apple or Amazon, but this is where your relative strength has been. The key to 2021 has been relative strength, and a lot of that relative strength has been derived from the interest rate trade. So it's interesting to see that. And now, we had just been talking about last Thursday as a group, the market actually got scared really briefly last Thursday by the pace in which TLT was rising, by the pace in which interest rates were going down. And that's what created this big old gap down. If everyone remembers, last Thursday, the market opened up down over a percentage point, and that was just fear of the speed in which interest rates were moving. We viewed that as a buying opportunity. A big gap lower in what is otherwise a bull market is generally a buying opportunity. All that happened last Thursday was a pullback into our technical equilibrium, which led to a buying opportunity, and that's as my team and I were viewing this TLT as overextended. Pre-market TLT was above $150, and I said in the morning meeting on this day, as it traded back below 150, I don't think this thing is getting back above 150 anytime soon. And it's not because I'm a genius, it's because I understand rules when it comes to the marketplace. I understand degrees of extension, and I'm sitting here and I'm studying what is causing this move. Why is the TLT getting bought up? Why are interest rates coming back down? It's a potential fear that growth is going to slow. It's a potential fear that coronavirus is resurging, but it was also technically overdone. So now it's pulled back into these moving averages, and now we'll see what happens next. And while I don't know, obviously it could go down, it could go up, it could go sideways, my biggest thought process right now is that overall we're actually going to see this TLT start to stabilize a little bit and actually go sideways. And that's a stable TLT, more stable interest rates than what we've been dealing here for most of 2021. That's actually generally going to be bullish for the stock market. Again, the thing that caused the correction back in March in the NASDAQ was interest rates rising. Not just interest rates rising, but the speed in which interest rates are rising. And what caused that big gap down Thursday last week was not just that interest rates were coming back down, it was the speed in which interest rates were coming down. So as we see TLT begin to stabilize, if anything, that should technically be bullish for our market. Of course, this has been a big thing and a big theme for the year 2021, but like I said, market environments are constantly changing. So it's interesting, and this is only a couple days here of information, it's interesting to see that the last couple of days, the TLT has been weak, but NASDAQ has actually continued to show really good strength. Apple today, once again, just mind-blowingly strong. This thing can barely correct at all. Had one little weekday yesterday, a little bit of a gap down this morning, and then next thing you know, huge update today, back to all-time highs. So it's interesting to see that the NASDAQ is maintaining strength while the IWM is maintaining a degree of weakness after the TLT's actually pulled back a little bit, which means that interest rates have gone up. Right now, as we're having this conversation, the TLT is up about 0.25%, so interest rates are a little bit lower compared to just yesterday's closing price. So technically that is better for the NASDAQ, and it's worser for energy, financial names. Financial names are obviously also being affected by the fact that Goldman Sachs and JP Morgan reported earnings this morning. But it's interesting to see here over the course of the last couple of days that Apple, Amazon has continued to get bought up while the TLT here actually corrected a little bit. So we'll see how it goes. It seems like there is a little bit of fear in this marketplace right now, which if anything, fear in the marketplace is another thing that can make markets move higher. And it's definitely something that we pay attention to. You know, my team and I, on a day-to-day basis, we are paying attention to multiple factors that are influencing the market, right? We are paying attention to interest rates. We are paying attention to sentiment. We are paying attention to money flow. Patrick, who is a really important part of my team, he publishes an excellent morning note every single morning into my virtual trading for the pro desk at about 8:30. It's an extremely important part of my daily research. And today his morning note was heavily focused on positioning. So I was just having a conversation with my team in the afternoon meeting, either yesterday or the day before yesterday, talking about how markets actually move, talking about what technical analysis actually is. A lot of people, I think, mistakenly think that technical analysis is just the study of chart patterns. You memorize what a bull flag looks like, you memorize what a head and shoulders pattern looks like, you memorize what a cup and handle looks like, and you go become a millionaire stock trader. I got bad news for you. It's not true. It's not how it works. The way technical analysis really works is broad. It's an understanding of supply and demand in the marketplace itself, right? So what I'm trying to do on a day-to-day basis, the question I'm constantly asking myself is, how does this current price action, or how does this gap in the market in the morning when I'm doing my gap research, how does it affect the participants who are already in the marketplace? Because if I have an understanding of how price movement affects the participants who are already in the marketplace, well, then I can have an understanding of what they are most likely going to do. One of my all-time favorite quotes when it comes to markets is from Charlie Munger. And he basically said, the older I get, the more I understand that incentives drive everything. Well, what is the incentive of every single participant who is in the marketplace? It is to make money and protect the money that they have, right? So, same thing. If you understand how the price movement influences the people who are already in the marketplace, then you have an understanding of what they're most likely going to do next. And if you have an understanding of what they're most likely going to do next, well, you position themselves for that. You position yourself for that. And that is the true art of technical analysis. And again, these are all the things that my team and I are digesting on a day-to-day basis to come up with a daily big picture game plan for the market. And even if you are a day trader, even if you are purely a day trader, which I'm not personally, I do a lot of day trading, but I also do a lot of swing trading. I also have a quantitative strategy I developed that I implement by hand into the market on a day-to-day basis. So, but even if you are purely a day trader, you're saying, I don't ever want to hold a position overnight. All of this information that I'm providing is extremely useful even on small time frames, because the big picture influences the small time frame. Look at this big picture of the market. Here, the SPYs, the Qs, all-time highs. Well, if you're not recognizing that, if you're just blind to the big picture of the market, maybe you're coming in and you're trying to short sell this market every day. And even if you're trying to short sell the market on a small time frame, a day trading time frame, yeah, can you make money for yourself? Of course you can if you're really disciplined. But man, is that the hard money trying to be short this market. I don't care what your time frame is right now. If you have consistently been trying to short this market since mid-June, good luck. Honestly, if you've been consistently trying to short this market since March of 2020, good luck. Now, obviously, there's been pockets here where we've had some significant declines over the course of a couple of weeks, couple of days, a couple of months, and my team and I have been able to capture that. I remember this one very clearly here at the end of August, beginning of September, basically a year ago now. It's crazy how time flies, where the market went parabolic, but the VIX was going up at the same time. My team and I were able to recognize it was time to get out of the way of the longs and actually put on some short-term shorts that paid really well, which was then just the setup to get back long on this market environment. But guess what? Even though there are some things to be concerned about right now, I'm concerned about breadth, I'm concerned about positioning, what I mentioned earlier. There's some things that I'm definitely concerned about with this market environment. If you are coming in every day right now and you're trying to short the SPYs and the Qs, whether it's a hedge for your longs or otherwise, you are just putting yourself in a really tough spot. So for now, even though I do have things with this market that I'm becoming a little bit concerned about, the market environment, the technicals here, they're saying the easier money is still to the long side. So that's my focus. Every day I'm telling my team, it's just a matter of how aggressive you want to be at this point. So because I have things I'm worried about, because the up move recently has been so big and so fast, the SPYs and even more so the NASDAQ has really started to go parabolic in certain points. The question I'm not asking myself is, should I be long or short? The answer to that's obvious. The question I should be asking myself is, how aggressive do I want to be in that pursuit? And the answer for me right now is not that aggressive. I still got plenty of longs on. I've got longs on from decent prices. Some of those names have been relatively strong. Some of those names have unfortunately been a little relatively weak. But I've got all the long positions on that I need. I'm still relatively heavy to the long side. My only short is AMC, which obviously doesn't really trade, with the market. I'm sure people who follow my webinar, I called out the break of this wedge, that I was getting short this thing a little bit before it happened here at the end of June. That trade's obviously worked great. I've still got some AMC short at this point. I apologize to the Wall Street Bets community on that one. I support you guys, I really do. I thought it was absolute BS back in January when they were restricting your ability to be able to buy. If you want to buy a stock that's worth $4 when it's at $70, more power to you. You should be able to have the ability to do that. I'm just not going to do it personally. With that said, there are some of these Wall Street Bet stocks that I think are very legitimate companies. Along with Bed Bath & Beyond, that's been a name that's had several crazy spikes related to the Wall Street Bets kind of situation, particularly back there in January. I think that this is a fantastic company. It's one that I want to be involved in. I'm involved in this SoFi right now, even though it's come down. I got out of my Wish position, but Wish was one that I was trading really heavily in June as well. I've been successful in the past with Sundial as that thing has given moves to the long side. So, I trade the way where I think I can make money. And unfortunately, this AMC pattern breaking down was just really bearish pattern, and I'm going to be here to make money in it because that's my motivation. That's what I'm trying to do. But overall, this market, even though you can selectively pick maybe a couple of shorts here and there, the easier money is to the long side. So I've got 18 longs and 1 short on right now. But at the same time, I've got some signals here that are telling me I should not be too aggressive in new long positions in the here and now. So that's pretty much where things are at. And again, it's the big picture game plan that my team and I are putting together on a day-to-day basis for the morning meeting every day that I really think is invaluable to the team that we're working with. And I'm so proud of the team that I'm working with because the improvement to the results have been so fantastic overall as a team. I love to see it. So I guess with that said, let me just jump into our PowerPoint here where I can talk a little bit about how you can become part of the team, because you got options. If you want to become part of my professional team, you could open up a professional proprietary trading account with T3. You could open up a retail account with T3. Or you could become a member of the Pro Desk virtual trading floor. T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We've got different physical offices, though right now everyone's working remotely because of the COVID situation. Our offices are shut down to traders. Professional traders do have to be licensed with an SIE and Series 57 examination. There are a lot of benefits to becoming a professional trader. For me personally, I could never go back to a retail account. My approach to trading does require the capital access that I'm able to get from T3. But with that said, I understand certain people that don't want to deal with the licensing requirement, or they may have certain conflicts of interest where a retail account could be right for you. Well, we've got retail accounts here at T3. Either way, professional account, retail account, you're going to get free access to the virtual trading floor that I run, which is comprised of the primarily professional trading community that I'm working with on a day-to-day basis. And if you want to work with a professional trading community, but maybe you're international or whatever, you can't have a T3 account, or you just want to stick with your current broker, that's your decision. I do think that there's probably downsides to that decision, but that's your decision. You could also even become a subscriber to the Pro Desk virtual trading floor. For the retail accounts, we've only got Sterling Trader Pro. It's our only software at this time, though we may be working on getting more. For professional accounts, we actually have 5 different trading software options now. We've got Lightspeed, we've got Sterling Trader Pro, we've got Wolverine, also known as WEX, but we've also onboarded Realtic, and we've also recently onboarded Tachyon. So whichever software floats your boat, you can have access to it if you're a professional trader here. We tend to be fairly platform agnostic. Personally, I've been using Lightspeed for over a decade. I love the software. We've got equities trading, we've got equity options, we've got futures, we've got options on futures. If any of these asset classes interest you, reach out to me, and I'll be happy to speak with you about it myself or introduce you to the right person. Personally, I'm an equities trader at T3. That's what I've been for over a decade. And we do have options trading available as well. I would just note that a lot of times when I'm speaking to a person who's been a retail trader for a period of time and trades options in a retail account, they are primarily trading options because of the natural leverage that's inherent in the product itself. And to me, that makes perfect sense. If I ever was to go back to trading a retail account, I won't, but if I ever was, I'm sure I would become an option trader myself. But on the professional side of things, where you get access to T3's balance sheet, you get access to large amounts of capital for equity trading, my thought process has always been, why do I want to trade a product that has less liquidity and is subject to time decay just for capital access, just for leverage access, when I already have as much capital as my trading really would ever require? New traders, and honestly experienced traders, should be aware that we have an excellent community that you're going to be able to be a part of, and that training and development is something we take very seriously. There's a 1-month optional training program for when people first get started. We have a daily morning meeting that I referenced earlier. We have a daily afternoon meeting. The afternoon meeting is very educationally focused. Every afternoon meeting ends in a team Q&A session. So that's everyone on the team. That's their opportunity to ask any questions about anything. It could be about a trade that they took. It could be about game planning. It could be about risk management. You ask a question about anything, my team and I are here, and we're happy to help throughout that meeting. However long it takes, we're going to get through it. And even experienced traders, I've got people on the team with decades of experience, former hedge fund managers, floor traders, pit traders. Even they'll tell me, hey Derrick, I got a lot out of your training program. Particularly, it really hit home when you mentioned this in your game planning class, or you mentioned this, when you were discussing routing the other day. So you'll have access to all that. You will be required to fund your account, and if it's a professional account, we call that a capital contribution. And what we do with a professional account is we typically start, depends a little bit on the agreement, but we typically start by providing incoming traders access to 20 times their capital for day trading, and 8 times their capital for overnight positions, and then they are compensated through a profit split. So if you want to be a $1 million trader, well, you put $50,000 into a prop account, and we can give you access to $1 million for day trading access, and now you're trading with access to $1 million. We're able to do that here, and that's regardless of your size. If you're an experienced trader, we have a very strong balance sheet. It's not unusual for someone to consider putting in $2 million into an account with us because they want access to $40 million, and it's not a problem for us to do that. So again, here's my email address. Reach out, doldsmith@t3trading.com, and on top of it, you get access to all this awesome stuff. You get access to my virtual trading floor, which is called the Pro Desk, for free, which again, you're welcome to pay for it if you'd like. It's a pretty good value. You get access to Scott Rudler's Trader Hub for free. You get access to Rudler All Access newsletter for free. You get access to my training program for free. Why do I do all this? Why do I spend hours after the market closes, when a lot of other experienced traders are going home right after the market closes? Why do I spend sometimes hours working with the traders at the company? It's because we are here and we are incentivized to see the traders that we are working with succeed. And that's it. If you are a successful professional trader here with T3, your account's going to be with us for potentially a decade or more, like mine has been. You're going to be making yourself money. You're going to be making T3 money. That's our goal. It's a win-win situation. And if we got to give away thousands of dollars worth of educational stuff for free to get you to that point, we're happy to do it. I don't know of anybody else that really offers that. Access to free training and development while having access to one of the most professional accounts that you can have on the street. So here's my email address, doldsmith@t3trading.com. Reach out, and I'll be happy to chat with you myself or put you in touch with someone on my team. And with that said, I'm going to jump back to my team. I'm going to jump back to my positions. I'm managing a lot of positions right now. So I hope everyone was able to learn a lot, and I hope everybody has a great day.